The price of Bitcoin is continuing to grind to the upside. In this episode, we'll be going through the higher time frame levels of resistance and support, understanding what wave are we forming here. Could we reject from this point, create one more high, and then reject back down? We're going to talk about the different possibilities, guys, because without a doubt, the price of Bitcoin on the lower time frames is looking very exhaustive, right? Those highs are getting rejected every single time. So it looks like it's losing a little bit of momentum. So we're going to talk about the different scenarios in today's episode, taking a look at the liquidity and also the CVD divergence. I'll be explaining the last moves in the 24 hours and how you could have profited from these moves and what are the next scenarios for those day trading opportunities, guys. Let's dive in here with the higher time frame technical analysis on Bitcoin. For anybody that is not trading in one of these exchanges, my favorite exchange is Bybit. Of course, I do use 𝗬𝗫 as well because of the fees. They are very, very low. But if you cannot trade on them because of KYC, you have bluffing, guys. They have a great bonus down below in the link in the description, okay? Just by signing up with an email and a password, claim that bonus, all right? The more you deposit and trade, the more airdrops you are going to get, and you can use those airdrops for trading and keep the profits. Let's dive in right away with the technical analysis, keeping it very simple on the higher time frame. Let's go with some really easy descending channels, okay, that we do have here on the chart. The first one was this one that was mentioned during the last few weeks to pay attention on that resistance level. We did get a beautiful rejection here just a few days ago, and now we're back here to this resistance zone. Now, I got some people saying that this trend line, this channel is not marked correctly, where I'm taking the first two lower highs. Some people say, why not taking these levels? Well, you can take those levels if we do get a trend line and connect the highs to this lower high right over here, getting this rejection here. Well, something interesting about this lower high resistance trend line is at this resistance zone, we do have a lot of levels, such as the value area high of this entire range. If we are going to go up to $70,000 in the next coming days, right? 69.5, $70,000, that is where we do have a lot of resistance. And something curious about this resistance that is very disturbing is that we got a series of lower highs right over here, as you can see on the chart. So this is easy for a liquidity grab. You got the value area high, the lower high resistance from this point, and you also have these lower highs to get that liquidity grab and possibly create a swing failure pattern. So it's a level that I'm waiting patiently on higher time frames, because it is a level where the price can get that rejection. If we take a look at Fibonacci from the highs here from June to the lows, that is also where we have the 0.88 Fibonacci, right? It's slightly below that level, but nevertheless, we are looking for this zone, the 0.88 being respected on the high time frames, but like crazy, okay? We've seen it multiple times. This is one of the most crucial levels for Bitcoin where it can get a rejection. That is in between 69.5 and $70,200, $300, give or take, right? A few $100, but overall looking for these highs to be claimed and getting the rejection so we can manage risk very well with a stop and be very defensive if the price does come down, to be protective with that stop loss, okay? So that's a higher time frame level of resistance that I do see. There is a lot of confluence at that zone. We also see a naked point of control, which is slightly below, okay? This was from a week here in June, the second week of June. You can see with a fixed volume profile, there is a bit of volume right there. I would expect that this level would be broken, okay, and have an attempt to go and hit $70,000. So I'm not that interested on this naked point of control unless we get lower time frame choppy price action at that level, okay? So overall, let's zoom in here as well and talk about the higher time frame levels of support. Here, to be honest, levels of support, you know, I'm just very, very cautious about the price action getting a much larger retracement. And that has to do with Elliott wave theory, okay? So any pullbacks that are breaking the local trend that we're forming now to the upside, I'll be a little bit cautious in long positions, just if the price, you know, manages to come all the way down to sweep up these lows over here at 63,500. So I would have to see a little bit of magic price action here to find some support on the lower time frames. I'm not too confident on higher time frames, right? Looking at a swing long position on a next pullback here, because I'm very much aware of the price coming down to sweep up these lows. So the most important level of support is actually beneath $63,500 when we take a look at the higher time frame for those swing traders. Now, this is purely based on Elliott wave theory as well, right? We could have that fifth wave formation, right, where we are going to get that leg up to $69,000 or $70,000 range in the coming days. We could be in that fifth wave still, getting that push of another couple of $1,000s. So I'm aware of this scenario. The other scenario, of course, would be that we are still in the B wave, right? We've completed 5 waves. This B wave is very, very complex. You could form a flat. You could get above the 5th wave and then come back down beneath the A wave, all right? B waves are very, very complex because it can go to the 382 Fibonacci from the start of the 5th wave, and it can even go to the 1382, right, extension if you're looking for a flat. That would take you to very high levels. Let's take a look at the extension right over here from the high of the 5th wave to the low. And if we do take a look at the possibilities of a flat target, it's in between the 236 and the 382. That is exactly at the $70,000 range where we have a lot of confluence. So, it is very possible either for this flat B wave, it is also a possibility, or for the other Elliott wave theory, which is completing that 5th wave. Okay, so overall, this level is strong resistance, not only because of the confluence that we have on the chart, value area high, the 0.88 Fibonacci from the drop, the descending channel resistance. It is also based on the waves, right? Trying to time those potential waves, okay? And overall, if we are forming a 5th wave, or even we are forming here the flat B wave, we should be looking for a pretty decent pullback, okay? So overall, short term, it is bullish, okay? Price action is bullish, and we could be looking to higher levels, right? 69, 70K, 70.5K, get that extension over here. When we do zoom in on the lower time frames, okay, we see this uptrend momentum continuing, right? A lot of people might think, oh my goodness, this is losing momentum and this is forming a bit of a ascending wedgie channel structure, and we're looking for that breakdown at some point. Without a doubt, guys, if you would have shorted the last, few swing failure patterns, the last local double tops, and I have been trading and scalping these highs over here the last 2 days, because if you do get in on these rejections from the local highs, you get a great position, you're managing your risk very well, and you can be instantly protective with your stop loss. The rejection from this high over here, you enter as you reject, your stop loss is at the high. As you're getting this movement down, you're realizing that the momentum, you got higher low support here, so the trend is still continuing to the upside. You need to be defensive, you need to take some profits, okay? Shorting and longing this uptrend is absolutely great for those scalpers. You are in an uptrend, so you long the lows of the uptrend, and how you want to long this is just basically hitting the support from higher lows, right? And you're also forming incredible bullish CVD divergence locally. So you need to be paying attention to this, because this is a very powerful tool. As you can see, the CVD on all of the exchanges forming those lower lows, price action forming higher lows. Bullish CVD divergence to take the highs. Now, you've been continuing to do this consistently. Look in the yellow here on Bybit. Higher lows on price action, lower lows. You got people shorting the market here, retail, and not managing to push the price down, and you're getting lower lows on the CVD, meaning that those highs are likely to be claimed. And this has been happening consistently. Higher lows on price action, lower lows on the CVD. What does it mean? You're going to come and take those highs. So this channel is continuing to the upside because of the bullish CVD divergence, and as simple as you are in an uptrend. So scalp day trade longs are in your advantage. However, also short positions, because we are testing here the previous week highs, right? You're testing the previous week highs as a weekly level. You have the previous week highs, previous week close, right, in this range. So without a doubt, you're creating that choppy action into resistance. And without a doubt, this is, good for scalp shorts. If you enter these short positions and you're very defensive, you can get in, you can be defensive, and you can take profit at the support, okay, trend line, as you can see here. Without a doubt, you test the highs locally. I'm going to be looking for another short only if the price rejects back down. You've got such a tight stop loss, and you're coming down and you're possibly creating a 2-to-1 risk to reward for a beautiful scalp, right? If you do get that breakout, okay, successfully, and you do not reject from the highs like you have been doing during the last 24 to 48 hours, rejecting every single time as you test the highs, well, if you do not get that rejection, okay, and you maintain above the level, then we go to higher levels, all right? And if we do get that breakout and we go to higher levels, then we are looking for that higher time frame level of resistance, right? Which is that $70,000 range, even 69,500, right? We've got the naked point of control, weekly naked point of control, value area high. You got that descending channel level of resistance, right? The new channel here from these lower highs. You got a lot going on here. And looking at Elliott wave theory, you could be getting the last push up before getting a major pullback. All right, I'm overall bullish for the mid long term, just a little bit cautious that at some point you could be getting a pretty nice pullback because of this rally that we've had to the upside. So in a nutshell, guys, on lower time frames, yeah, you can be looking for short positions, all right, at the highs. If you do reject from them, take them as scalps and be defensive. Just stop loss beneath the high. Once you do have that movement to the downside and your entry point, you're basically being defensive. Then you're getting stopped out at break even. Of course, you're scalping short. You're taking support at these crucial levels of support, basically the higher low support trend line. You're seeing bullish CVD divergence, which means that the highs can be claimed. So you want to be defensive every single time. Take profits, be defensive, get stopped out at break even, all right? This is a simple zone to trade. You just short when you reject from the highs. And when you hit support, of course, if you are forming bullish CVD divergence, you can take the long position, stop loss beneath the last higher low, because that would be the invalidation of the CVD, your entry point, and you're targeting the highs. So you're shorting, you're longing, you're shorting, you're longing until this breaks down or it breaks to the upside, right? Trade that nice little uptrend, levels of resistance, double tops, and the support level till it breaks and just get stopped out, right? If it doesn't play out at a small loss. But this has been beautiful for scalp longs and scalp shorts in this range, guys. So basically, that's what I'm looking at here, guys. Higher time frames. We do know the levels of resistance, levels of support here on the lower time frames. I'm a little bit skeptical on the possibility of looking for a long position here with this uptrend, and the main reason why is because you could form a much larger corrective move, right? B wave can end wherever. They're very complex. They can be here, right? It can be a flat. It's very complex. So I am aware of the price rejecting at some point, and I'm really cautious about looking for a long position as we move down. If we move down with high volume, it's going to be very dangerous look for long positions here, because you have that amount of liquidity beneath these lows at 63.5, and the price could just push down, okay? So I'm really not interested in looking for long positions if we do have high volume on the rejection, and try and get in one of those short positions at the highs just to have a swing trade position, all right? I am speculating on that and looking to catch the highs and being very defensive, because nevertheless, if you get stopped out at a tiny loss or break even at these highs, once that move happens, you're just making a 10-to-1 risk to reward, right? From trying to catch these double tops. You can be very defensive, guys. It's actually an easy range where you can just manage risk very well and just take small little losses or even break even, okay, and be very defensive. This is one scenario. This is the other scenario where you're in the fifth wave, guys, and we're just going to push through here, okay, to $69,000-$70,000 range in the next coming days, okay? So not easy, but overall, I'm a scalper day trader. I look for the longs, look for the shorts here in this small little channel, all right? And it does look pretty good for the price to reverse, but I'm still aware of, still completing this possible fifth wave, okay? So just be cautious with your trading setups. When we take a look at the liquidity, we can see that we do have a lot of liquidity above us, right? This is looking at the weekly time frame on the heat map, and you can see above $68,000 all the way up to 69.5, right? You got hundreds of millions of short liquidations, right? Just even, gathering all of that liquidity, even a few $billion, right? All the way up to here to 69.570K. So you might just get that massive move up to $70,000 to sweep up all of that liquidity and then potentially get that corrective move. There's not that much liquidity beneath us, right? When you take a look at the weekly time frame, there's more liquidity sitting above $68,000. So we just need to be concerned about, we might just get that wick here to the upside, that candlestick that breaks through here and grabs that liquidity. Okay, so shorts, you need to be very defensive and very selective, just looking for those double, triple tops and just, stop loss at break even, guys. It is really not worth it to add to a short position because you might get that God candle to $70,000. You're pumping $2,000. And those people that are adding to short positions, they're just going to get burnt, right? We don't know how high we can go. Not much more has to be said, guys. Thank you very much for joining, and I will see you in the next one.